Hi, good morning. This is Joland, and today we will discuss about bookkeeping. And this video will be helpful to those who wants to take a national assessment from test, the so-called NC3 for bookkeeping. So let's define bookkeeping first, okay? So bookkeeping is the process of recording. So later we will talk about journalizing, and that is recording. Organizing, summarizing, interpreting, and analyzing a business financial transactions. And a bookkeeper is a person responsible for that process. So once you pass the examination, you will be called a bookkeeper. And what would be the difference between bookkeeping and accounting? Actually, they are similar. But with regards to accounting, you need a high level of analyzing. Okay? All right. And then in accounting, there's an equation, which is assets is equals to liabilities plus owner's equity, or liabilities is equals to assets less owner's equity, or owner's equity is equals to asset less liabilities. All right, so let's define asset. Asset is is anything of value or a resource of value that can be converted into cash, or something containing economic value and or future benefit. All right, so let me give you an example. For example, a company has an equipment. Is that equipment has a value? Yes. Is that equipment can be converted into cash? Yes, once you sell it. So that asset is considered, or that equipment is considered an asset. All right. Here are the common examples of assets. Actually, here are the common account that we are going to use in examination. Cash, accounts receivable, supplies, merchandise inventory, and equipment. I use chart of accounts in this slide. So let's define chart of accounts. Chart of accounts is very important in recording or in journalizing transactions, because chart of accounts is the list of accounts that we are going to use. The only account listed in the chart of accounts that we are going to use in journalizing. Okay. So let's proceed to liabilities. Liabilities are present obligation of an entity arising from past transactions or events, the settlement of which is expected to result in an outflow from the entity of resources embodying economic benefits. So here are the common examples of liabilities. Actually, there's a lot of liabilities, but here are the common examples, because these two accounts are the only accounts that we are going to use in examination. For example, accounts payable. Once you purchase a merchandise, but you and the seller agreed that you will pay within 30 days, that is an accounts payable. You have a present obligation. Okay. All right. So let's go on to owner's equity. Owner's equity is sometimes referred to as the book value of the company, because owner's equity is equal to the reported asset amounts minus the reported liability amounts. From the equation above mentioned, all right, so owner's equity is equals to asset less liability. So once you paid all of your liabilities from your asset, that is a book value of the company or your owner's equity. Okay, so here are the examples of the owner's equity, and then there are 4 factors affecting the owner's equity. The first one is investment. Once the owner invests, we will use a capital account. The second one is the drawing, or once um, the owner withdraws certain amount of money from the company, we will use a drawing accounts. And then the third one is revenue or income. Actually, there's a lot of revenue account, but since the examination scope is only for merchandising concern, we will use a sales account for the revenue. And then for the expense, that is the fourth one, we will use a purchase and other expenses account, such as salaries, utilities, and other. All right, so let's go on to the normal balance. The normal balance of asset is debit, while liabilities in owner's equity is credit. So once you debited an asset, there's an increase. And then once you credited a liabilities in owner's equity, there's an increase as well. Okay, so let's proceed to the illustration. In accounting, there's so-called double entry bookkeeping. So what is double entry bookkeeping? So once you record a debit, it must have a corresponding credit. And here are the examples and the illustration. Once I debited an asset, it should be a credit. It should have a credit to other asset or to liabilities or to owner's equity. So what would be the possible transaction for this illustration? I debited an asset and I credited to other asset. Okay, so once you sell an asset, for example, equipment, as I mentioned earlier, the proceeds from that we called cash. So there's an increase in cash, and then there's a decrease in equipment that is credit since you already sold it. All right, and then for the next, um, debit to asset and credit to liabilities, meaning increase in asset and then increase in liabilities. So once you borrowed money from bank, so there's an increase in asset or because you receive a money from bank, and then there's an increase in liability because there's a liability arising from that transactions. And the next one is asset debit and owner's equity credit. So once the owner invests to the company, so there's an increase in asset and as well as there's an increase in owner's equity. Okay, so I hope you learn something from this video, and then next time we will talk about the 8 steps of accounting cycle, and I will discuss the first step, the identifying transaction. Okay, and before I end this video, I just want to leave this text coming from Proverbs 8:11. For wisdom is better than rubies, and all the things that may be desired are not to be compared to it. All right, so aim to have a wisdom, most especially wisdom in the Word of God. All right, thank you and have a blessed day.